Let's dive into how to trade supply and demand zones. On today's video, we'll go over examples of trades that we have executed, and we'll show you how we identify supply and demand zones to use that to our advantage to get into those trades that were profitable. All of the charts that you're going to be looking at today, all of the technical analysis that we do on this video will be done on Webull. If you want to join Webull, it's a great brokerage. You can do so by clicking the affiliate link down below. If you deposit $100, this channel will be rewarded with one free stock. Now, the first trade that we're going to get into has to do with McCormick. The spice company trades under ticker symbol MKC, and that trade had gains of 304.79%. So 3x your money by using supply and demand zones trading strategies. Now, everyone's different, but we're looking at a chart right now, and this has daily candles. And what I personally like to do is use daily candles or weekly candles when identifying supply and demand zones. Now, you might not even know what a supply and demand zone is, or you might have some vague idea and you're looking for strategies to use that to your advantage. Well, we'll go over both of those in this video. So if you don't know what a supply and demand zone is, you might know what a support and resistance level is, because they're essentially the same thing, but the terminology is a little bit different. Basically, a supply zone is a resistance level and a demand zone is a support level. A demand zone is when a lot of buyers want to get into the stock. There's high demand for the stock. So the stock price typically bounces and moves higher in a demand zone because you're introducing an influx of buyers. In a supply zone, it's the opposite. The supply, the amount of people selling, the supply of the stock goes up. And the reason why the supply of the stock is going up is because there's a lot of sellers. People are unloading their position. That typically happens at a resistance point. So essentially what you're doing is, when you're doing your technical analysis and when you're looking at the charts, you're looking for areas in the past where the stock has bounced at a support level, a demand zone, and a point, a price, or a zone where the stock has peaked and sold off. That is your supply zone or your resistance level. It's as simple as that. The more occurrences that you can find in the past of the stock bouncing or being rejected, the stronger that supply or demand zone is going to be, and the higher the probabilities that what happened in the past will again happen in the future. Because you have to keep in mind, when trading stocks, you're never guaranteed to make money when you enter into a trade. You are betting on a position, you are betting on a movement or direction of the stock. But when you take that bet, you want to have the highest level of profitability on your side. You want the trade to work out more often than not. So you're assigning some level of probability. So the more times in the past that something has happened, the higher the chance something like that is going to happen in the future as well. It's as simple as that. Everything with trading has some level of probability associated with it, and it is never 100%. Let's go over MKC and how we identified support and resistance levels. Well, it's really easy. You can obviously see a double bottom here on the daily candles. So what you do is, everyone's different, but all I do is draw a horizontal line. And it's understood that that line is not a certain price where the stock is going to bounce, but it's around that price point where I think the stock is going to bounce or be rejected. So we have a double bottom here. Now, if we scroll to the left, you can also see that we correspond to a peak right here. So there's something that you need to know when charting supply and demand zones, or support and resistance levels. And that is that prior resistance becomes future support once that level is broken. Once that level has been broken and we are now trading above that, that becomes future support. So we have 1 point right here and 2 points right here where the stock has bounced or been rejected in the past. So 3 occurrences at this demand zone. So that's a pretty strong indication that the stock is going to bounce at those levels. Now, if I look at the weekly candles, it's a little bit clearer that that level is a nice demand zone because of those three occurrences that we shown, but it's all shown in one picture because we're zoomed out a little bit since we're looking at weekly candles. So what a trader can do here is, if we go back to the daily candles, is we can wait for confirmation that yes, the stock is indeed bouncing here, and then we can get into a trade being bullish on the position, basically making a bet that the stock is going to move higher. And that's exactly what we did. Now, to multiply our potential returns on this, we leverage our position using options. And what we did is we got into a call debit spread. And that is how you can get 300% returns off a position. You're not going to do that just by buying stock. The risk is higher, but we're okay with that higher risk because of the higher potential reward. And if you've been following this channel, you know that that's the way that I like to trade. And those are the trades that I post on the private Discord server, link down below if you want to join. But it's using traditional trading strategies and then leveraging it with options. That's the way that we get those multi-bagger returns. So when trading MKC, what we did is we got into a position that was bullish, and we got into that position at a demand zone. Now here's another trade that we got into, and this was from a supply zone, and it's with Peloton, ticker symbol PTON, and we closed out of this position for 130% return. Now this stock, the chart is a little bit more choppy because the stock has had a tremendous fall, so we're covering a lot of ground price-wise with this stock in the last year or so. So we're going to zoom in here, and it's going to become a little bit more clear when we zoom in. So the first thing that we need to know is where is our demand, where is our supply zone, because this trade was a bearish trade because we were at or above a supply zone, so we thought the stock was going to fall. And if I zoom in here, you can clearly see that there are two peaks, and maybe this becomes more clear after I draw this horizontal line right here at these two peaks. You can see that that's a double top. Well, what happened with the stock? Well, the stock had a catalyst with earnings, and it shot way past that double top. So now we're setting up a new high, but it's real quick reaction. It's one daily candle that sent the stock soaring. And in my personal opinion, when you have that kind of candle, a lot of the times, more often than not, it is going to retest the levels that it was at prior to that catalyst event. That's what typically happens unless it's extremely justified and the stock was just not priced right beforehand. And in my case, my viewpoint on Peloton stock is that this company is losing a ton of money. The future is very uncertain, so there's a lot of headwinds. And it's likely, in my personal opinion, why I got into the trade, that the stock was going to move lower. Which it did because, like I said, it was in that supply zone. So what happened with the stock? Well, the stock fell. Took a little bit of time. This was a longer swing trade. And now it's at $7.81, where at the time it was close to $18. Now, on the flip side, where the stock is right now, you can almost say the inverse of what happened and why I got out of my trade, because right now it looks like we might be in a demand zone for Peloton stock. Me personally, I still wouldn't really be a buyer of this stock long term, but the technicals do not lie. You can see that there is a history of the stock bouncing at around these levels. And where are we right now? With the candles, we're at those levels. And what do these candles indicate by the way that they are shaped? Well, it's showing that the stock, as soon as it hits that price, it seems to be moving back up and closing higher. If we look at, let's say, a 5-minute chart, and we zoom out, it is a little bit clearer. As soon as we got to that price, within a couple minutes, within a couple hours, let's say, the stock was already higher. So as soon as it gets to around $7.25, it seems to be moving higher and getting closer to $8. Next trade I want to go over is a swing trade that we got into on LTHM, which is still open and is around 62% returns on that trade currently, with a potential to be 10x returns. So here we are, we're looking at this trade, and this trade was to go long LTHM. So we're looking at a demand. So we're looking for a demand zone or a support line. So basically what we're looking at is multiple occurrences where the stock has bounced at around these prices. And it's pretty clear that somewhere around these prices, as you can see by the times that the stock has bounced before, it is pretty volatile, and a lot of the times before in the past it has moved higher, and it has moved higher by a significant amount, and it has moved higher pretty quickly as well. But if we look at this, you can see that the stock broke out right here. That's a nice signal. You can see that the stock bounced here, it bounced here, it bounced here, it bounced here, it bounced here, bounced here, and it bounced there again with another candle right here with this one. And that is when we got into our trade. When we got into our trade, what we did to set our max potential reward and leverage our money is we got into that call debit spread, and the short leg, our max gains would be at $26, which is the most recent resistance or supply zone for this stock. So if we draw a horizontal line right here, you can see that right there is at a price of $27. So if this stock was to get to that price again, which it has done in the past, then this trade will be posting returns of 700%. So I'm going to introduce a new trading strategy real quickly, and just to show you that it's not just one trading strategy that is going to dictate whether you get into a position. You have to look at price action and other things as well. So what we're looking at right now on the daily candles for the KRE, and what we see is that the stock has set a lower low. But on the RSI down here below, you can see that the RSI is higher than it was back when the RSI was at its lowest point. So essentially the trend line on the RSI is moving higher, where the stock, on the other hand, is moving lower. That is what's called an RSI divergence. And what that is an indication of is that momentum, actually to the downside, is starting to fade, because the lower the number on the RSI, essentially the higher the momentum in that direction. So if you're at 20 on the RSI, the stock is oversold. There's a lot of downward momentum. If you're above 30 right now, which we are, there's not as much momentum to the downside. So eventually you will see the stock bounce. But just because momentum is fading doesn't mean the stock is done moving lower. Sometimes it is, and this is why this strategy is good for trying to find reversals, but you have to look at other things as well. Now this stock might actually move higher from here. Maybe it's found the bottom, but I wouldn't associate a high level of probability to that, because outside of the RSI divergence, what is showing us that the stock will bounce at these prices? What makes $38 so fantastic with the KRE? Are people now suddenly going to be bullish because it hit this price because of performance in the past? Well, not really. If we zoom out, we can see that this is kind of no man's land for KRE. And let's look at the weekly chart. Well, now we can clearly see that there is a bottom right here at around $28 as indicated by that white line. This is a demand zone shown on the weekly chart. Now if we keep on panning to the left and we look here, oh, we got another demand zone, another bounce at around these prices in the past. And if we keep on panning to the left, we got another one right here, and you can see if we zoom out now, it becomes a little bit more clear that this price right here seems more likely to be where KRE will find support. Now on the flip side, if we look at the RSI on the weekly chart, this is not showing divergence. This is showing that it is oversold, and it just got into oversold territory. So downward momentum can continue. This is what makes trading hard. It depends on what time frame you look at, and things will look differently on the daily chart and the weekly chart, and nothing is guaranteed. But when I look at this trade or this stock right now, I would feel much more comfortable getting into a position under $30 a share, because then I see that we have a demand zone as shown on the weekly candles, and maybe it's at that price where the stock actually starts to bounce. At least I would feel more comfortable getting into a trade at that point than right now, even with that RSI divergence being shown on the daily chart. But like I said, trading's not easy. The stock could bounce right now and I could miss out on an opportunity, but that's okay. There are plenty of opportunities out there. You just have to get into positions that you feel comfortable with, that fit your eye, and that are set up for your type of trading strategy. So what I'm going to do with the KRE is I'm just going to watch it and see what happens and see if it actually gets to that demand zone that we identified on this video. So there you have it, my friends. That is how you can use supply and demand zones to identify trades. Now, if you want to have live trade alerts and you want to be notified whenever I enter into a position, you can join the Discord. A link is provided down below through the Patreon. Other members as well will post their trades on that private Discord server. Outside of that, I thank you so much for your time. It's been real. It's been fun. It's been real fun. I'll see you on the next video. Peace.